All right. Good morning, fellow traders, and welcome to today's live Technical Tuesday session. Today is October 8th, 2019, and I hope you guys are excited about today's session. There's going to be a few things we're going to talk about today in regards to the Euro USD or the fiber and the US dollar Japanese yen. And one thing I want to mention before we move forward is that if you guys have any questions, please let us know. There's a public chat area. It should be on your screen right now. So then if you have any questions during today's Technical Tuesday session, just please let us know. Of course, we will be more than willing to help you guys out in any way that we can. But with that said, let's dive right into today's analysis. And yeah, so then if you've been with us for a while, or if you saw last week's Technical Tuesday session, we talked about how there's really still a bearish bias on the Euro USD. We could see that price has been trapped within this descending channel. It's been making lower lows and lower highs, lower lows, lower highs, lower lows. And from this low right here, which we predicted, we talked about this low last week, which is at $1.09. This low price consolidated, it bottomed out on a smaller time frame, and we saw this correction higher into this zone or area right here. Now, what I want to do now is identify this area. Let me first take this horizontal line and drag it right to where we want to look to. So if you really pay attention to where price is testing, you can see that price is testing a key zone or key level right around here, which is at $1.10. Let me change this a little bit. Let me make this $1.10. But you can see that price had a hard time breaking above that particular level or zone. That is what you would call an institutional zone or level. So yeah, so then price had a difficult time breaking through this particular institutional level or zone of $1.10, and you can see that it's also finding some resistance right at this 20-day moving average. This 20-day moving average is functioning like a dynamic resistance. So there's multiple reasons behind why we're, finding price, why price is having a difficult time breaking higher. And if you look at these last few candlesticks, you can see wicks on the top of these candlesticks. You can see a long wick here, wick here. And of course, this is today's candle. The day isn't over yet. But what we see from these candles is long wicks to the upside, which means that this is an area of supply. Sellers are positioned in this area, and for some reason, they don't want price to push higher. But right now, the bulls and bears are fighting, because as you can see, for the past few days, we have not been able to make new lows as well. It's been really moving in a range, and we'll see this more clearly when we drop down to a smaller time frame. But let me just zoom out, and let me just first say that for now, our bias is still to the downside. What we could do is wait for price to eventually give us a selling signal. Wait for the bears to confirm that they've taken control of the market, and that we should see a slide to the downside. And as you guys know, we do have this this daily descending channel, and price may continue to consolidate until we see a retest of this channel high or this channel resistance. I don't know, but what we need to do is just do our analysis, do our due diligence, and look at multiple time frames in order to get a bias on what's taking place. So then we see this. We see that price has been sliding lower. Price appears to be testing a key level or zone. So what we want to do next is drop down to a smaller time frame. And I guess for the sake of time, well, let me just go through each time frame. Let me just go to the 4-hour next. And we can examine what's taking place on the 4-hour. Okay, So then we can see here that at this 4 hour, or on this 4 hour chart, we can see that price did exactly what we wanted it to do last week. We saw this reversal signal, this head and shoulders near the lows, or at $1.09 institutional level. We saw this reversal pattern form, and price expanded higher to test this $1.10 institutional level, to test this 20-day moving average and this 100 simple moving average. This purple line represents this 100 simple moving average. But if you look left, you could see that this is really an area of structure resistance. It was structures, what was once resistance, or what was once support here, is now functioning as resistance. But we could see that it was support here, support here. Let's go down in history to see if it was support anywhere else. Well, that's good enough. We have enough data to conclude that this is a key zone or area of structure that we have to pay attention to. So then what I'm going to do is draw a box to identify and isolate this particular zone. So just going to draw a box from here all the way to here, you could say. And I'm going to change the color a bit. So then we know for certain that this is a zone that we have to really pay attention to. There's a lot of confluence in this zone. Therefore, we need to wait for bearish confirmation. Now, what I think was going to happen is something like this. I'm just going to, well, let me just drop down to the 1 hour chart first and share with you guys what I think is going to happen. But apparently we do see this consolidation. It's pretty apparent. Price has been moving within this range. It's been trapped between a support right here and a resistance up here. So one thing we want to do is just wait for the breakout. Either price is going to break to the upside, or we're going to see a break to the downside. But right now, we're just waiting. We're just in wait and see mode, unless you want to trade this consolidation, trade the highs and lows of this consolidation. But bear in mind that a breakout will happen soon. Price doesn't always maintain its range or consolidation. Eventually, it's going to break out. And what's typically taught is that the longer the consolidation or range, the bigger the breakout. So then, since this has been in consolidation for some time now, we can expect a nice breakout in either direction. Price can either break to the upside or it could break to the downside. But yeah, let me go to the 1 hour chart and let me just briefly share what I think could potentially happen. But we see that price appears to want to slide lower to retest these lows again. If you want to, you could trade this range if you want, or play the range. You can enter a sell up here, take your take profit down here somewhere. That's if you want to. If you want to do that, you can just play the range. We actually have a strategy within our private community on how and when to trade these ranges, because sometimes it may not be good to pick the tops and bottoms of ranges, but we do have a strategy that we use whenever the price is in consolidation. But in this case, you can trade that strategy. You could trade, enter a short, and sell it down to the lows if you want to. However, if you want to be more conservative, just wait for the breakout. But this is what I think could potentially happen. Let me just zoom in here. What I think may happen is something like this. We may see price break to the downside, which I think will happen. We have all this confluence up here, the structural confluence, this resistance up here. I think price may break to the downside. And then from there, right when we get a break and close to the downside, we'll still retracement to retest this consolidation. Because this consolidation, this is where the bulls and bears were fighting. And oftentimes price would like to retest the consolidation. So then right when we get that retracement higher, or that correction higher into this consolidation, then what I'm expecting is a nice selling opportunity based on the range of this consolidation. So in other words, we'll take the high of this consolidation, which is around here, down to the low of this consolidation, and that would represent our sell trade. So then Let me just drag this down here. So then, I'm expecting for something like this to take place, right? And then from here, I'm expecting another move higher, possibly to test this ascending trend line, this descending trend line resistance, or this channel resistance up here. But in other words, what we're going to do is wait for a selling opportunity. Yeah, we're going to wait for price to break to the downside, wait for that pullback to retest consolidation and enter our short. All right. So yeah, do anyone have any questions about the Euro USD? Going once, going twice, Okay. Yeah, I know Marvin's here right now. I know I didn't introduce Marvin, so yeah, I apologize for that. But Marvin, my brother, is here, my twin brother. So yeah, did you want to say anything?
Yeah, but yeah, it'll be brief because I know this is primarily a technical analysis webinar. But yeah, okay. I know we got one
Wayne.
question from Wayne. He says, "Is this the 1 hour chart?" And I know right now, Melvin, yes, he is on the 1 hour chart.
Yeah.
And you can see here that at the moment, your USD is consolidating the gains from earlier. And really, this consolidation, it's kind of like the market is sort of reluctant to create a sheer bias, especially ahead of some key risk events during the second half of this week. Some of you guys already know that the U.S. and China are going to resume trade talks and trade discussions, and there's still some caution or concern on whether or not any type of deal, limited deal, restricted deal will be done. Because, of course, we all know that in the U.S., this is an election year. And, of course, if the economy continues to do bad and if there continues to be, pressure on equities and just, stocks continue to fall, then that won't look good, especially for the sitting president, especially for President Trump. So then he may be willing to put in place a restricted deal if China is willing to purchase a few agricultural products. And that would be sort of like something done in exchange for the tariffs that are supposed to be imposed on China on next week. So then there's the possibility of there being a restricted deal, but of course the way things are looking now, that may not be the case. So then there's a lot of confusion, there's a lot of indecision in the market, but of course we may see this reluctance to move any further until we get clarity on that. So then right now, it's consolidating the gains. I do believe there will be a breakout today. We have U.S. PPI numbers, inflation numbers coming out. And, of course, if you look at U.S. Treasury yields, we've been seeing Treasury yields pressured to the downside as well. So then we may see either a further lift to the upside. I mean, nobody really knows for sure. But I do believe that we will definitely eventually see a breakout in this range sometime within this session.
Mm-hmm.
But for the Euro USD, there's not much. Of course, we know there's still sluggish data coming out of the Eurozone. There's recession concerns on both sides of the pond, with U.S. PMIs coming in a little bit softer than expected, as well as Eurozone, Euro-wide PMIs showing sluggishness and softness and contraction as well. So then there's reason for concern. There's reason for more of the safe haven currency or asset to benefit as well. So then it'll be interesting to see what happens as we move closer to the resuming of these trade talks, and even certain headlines regarding Brexit and other geopolitical concerns as well. So then that's kind of what I wanted to touch on for Euro USD. Not much, but just kind of briefly share on some of the fundamentals.
Yeah. So then one thing I want to mention is that, you really want to trade what you see, not what you think. Because of course we can have an idea of what we believe may happen, and the direct opposite may happen. We could, go off of what we fundamentally may perceive as happening. But one thing I want to mention is that some of your best traders now I don't know, like you guys can chime in if you want, but have any of you guys heard of a book called The Market Wizards? It's a book called The Market Wizards. If you haven't heard of it, then I highly recommend that you buy it, because if you really want to, of course, become a trader and let this become your full-time career, then you really have to read these books and get feedback and get insight from traders who do this full time, who's made a lot of money, and they're successful at trading. But one thing that they would tell you is that, their evolution into becoming a great trader came as they started focusing more so on technical analysis. And when they began to focus on that, and and not to really ignore the fundamentals, but when they put all their eggs in the technical basket, or most of their eggs, that's when they seen things change. So then, one thing I want to mention is that we can have a fundamental bias and assume that price is going to move based on the headlines or what we perceive is happening globally or macroeconomically. But the direct opposite can happen. Price typically tells you what the true bias is. Right now, there's indecision in the market. That's one thing we do know when it comes to the Euro USD. The bulls and bears are fighting. There's indecision. So, whenever you see that indecision, the best thing you could do is sit and wait, or just trade that indecision. Just play the range. However, a breakout's going to happen. My bias is to the downside. However, we don't know. Mainly due to the area of confluence down here. We may see a break to the downside, a pullback, it's selling opportunity down into this zone, and then right here we may find a buying opportunity somewhere within this area or zone due to a plethora of reasons I cannot go into now. But I think that may happen. However, just because I think that may happen doesn't mean that will happen. So then we have to trade what we see, not what we think. Now let's just see that. Let's just say that price does break to the upside. If we see price break to the upside and break above this zone, this $1.10 zone, and even break above this descending trend line resistance, or this descending channel resistance on the daily. If we see that, then of course we need to have a bias, to go to the upside, a bull bias. Just wait for price to correct, to retest this trend line or this $1.10 institutional level, and then you'll look for your buying opportunity, and yeah, you'll just buy. So then that could happen as well. We could have a break to the upside or a break to the downside. I'm more so leaning towards a break to the downside, but I don't know. We'll see. So then price will have to break. Let me remove this. In order to confirm a true breakout, price will have to break these lows right here. Let me just draw this in. Right here, this low right here at 1.0957. If it breaks that low, then we could say that the bears are taking control. All right. So yeah, are there any questions about anything else? I know Wayne, Stuart says I've heard of it but have not read it. Yeah, I guess he's talking about market wizards. Wayne says I don't watch the news anymore. It's all fake anyways. Yeah, a lot of it is fake and manipulated. Wayne, yeah, fib level. I guess, yeah, you're saying that it retraced. This is a fib level down here, or this. Yeah, I'm not sure exactly. But yeah, Wayne says I got the crystal ball, bro. She going up. Yep. Yeah. Okay. Yeah, we'll see. It's a possibility, but one thing you learn about trading is that you cannot be too overly confident on what's going to happen. So it could go up. We never know, but we have to be prepared for either scenario. And that's why when it comes to trading, you have to have this if-then philosophy. It has to be conditional. If price does this, then do this. If price breaks down, then do this. So then you have to have that conditional statement. You have to be able to adapt to whatever the price behavior is. You have to be fluid rather than static. So yeah, but it can either go up or it can go down. So then we just have to wait and see what happens. I think it's going to break to the downside, and then we're going to see a pullback and an opportunity to enter short and sell this lower. But if you feel it's going to break to the upside, then just stick to your bias. All right. So, all right. Are there any more questions about the Euro USD before we move forward? We still have to talk about the US dollar Japanese yen, and then we'll definitely call it a day. But if there aren't any questions, then we can talk about the US dollar Japanese yen. So then let's go there now to the US dollar Japanese yen. Let me first go to the daily chart first, and then I want to go to the US dollar Japanese yen. So let me go to the daily, and let me go to the US dollar Japanese yen. Also, guys, like if you guys have if you guys don't know what we're talking about, if there's still let me clean this chart off. If you guys still have you guys are clueless about what's taking place, just let us know. We really want to help you guys, or just join our private community. That's where all the good content is. Trust me, for $1 you get a lot of good content. But all right. So right now we're looking at the US dollar Japanese yen, and we're looking at the daily time frame. And one thing I want to point out to you guys is that we see a possible of a reversal signal sort of taking place. I'm not going to get too much into it right now, but what I do want to point out is that for starters, we have this zone right here, the zone of daily structure support right now. It was, of course, support here, function as resistance multiple times here, and now it's functioning as support again. Let me make this a little bit smaller. But we can see that price fell and it's tested this range. It popped higher. You could have took advantage of that move higher. We talked about this move to our private community. If for those that were on the live webinar, price did exactly what we was thinking it was going to do, and it found resistance at this area right here, where we, $1, 107.50, which is exactly where we said that price would find resistance. But we saw price bounce, and then for some reason today we saw the yen gain strength. There was risk aversion. If you look at all the yen currency pairs, they fell strongly for today, which means that there was probably some news that triggered that type of price action in the market. But what I do want to point out before we move forward is that on this daily time frame, we have what could possibly be a nice what? Let me just draw this in. A nice what? What could potentially be a what? What is this, guys? For those that are familiar with classical chart patterns, what is this that I just outlined or drew in? Yeah, well, yeah, okay, yep, it's and then yeah, the drawing, yeah, that's what I'm outlining is the drawing. So yeah, I just drew this in. Price, of course, starting here, price fell lower. Then we get the retracement. The price falls lower, makes a lower low and a lower close. We get a retracement to sort of retest the highs. It's not there yet, but it tried to retest these highs. It failed. Price fell lower to the same structure area. So then there's a possibility that we could see a push higher. But one thing I want to point out is this, is that what is this called? This drawing called, and I think Brian chimed in, inverted head and shoulders, and yep,
Potential.
yeah, it's a potential inverted head and shoulders. It's not an inverted head and shoulders yet until we see a break of this to the upside. As of now, our bias could still be to the downside. That's what we want to do, but we have to look at things you have to look at things on a larger scale in order to sort of get an idea of what could potentially happen. So I know Wayne said he feels it's going down, and yeah, that's been the bias for today. Yen has been strengthening mainly due to some risk aversion and yields. If you look at U.S. 10-year Treasury yields, you can see that of course it's been falling lower. So then usually when you see that fall lower in Treasury yields, that can give you a clue that we could be seeing that move play out in the US dollar Japanese yen, slide lower as well.
Yeah, they have a strong,
A correlation.
correlation coefficient. So then the correlation coefficient between U.S. dollar versus Japanese yen and U.S. 10-year Treasury yield is very tight. It's pretty much very close, like at I think a ratio of 1. But yeah. So then of course there's intermarket, on an intermarket analysis perspective, there's a justification for us to see greater softness or more softness in U.S. dollar versus Japanese yen. But there's also the likelihood, since we know this is a structural zone, this is an area of demand, that there's the possibility of us seeing an inverted head and shoulder form at the break of this neckline.
And price bouncing from this level. Because I know, of course, you want to follow the trend, but at the same time, you can't ignore key zones. Remember, when it comes to trading, it's all about identifying structure, areas of supply and demand in the market, or support and resistance. Like, even though, of course, we see here that the trend has been to the downside, even though we see this reversal, because actually, guys, we do have what you call a double bottom right here. Price broke, made a higher high, higher close, and now we see this retracement into this particular zone right here. So then there's a possibility that we could still see price push and expand higher from this zone. So I know Wayne feels like it may slide lower, and it's a possibility. Like I said, we never want to be rigid with our approach. We always want to be willing and able to adapt to what price is giving us. But there's also a likelihood for price to bounce from this level as well. Also, if you look at yesterday's candle, what was yesterday's candle? What is this candle called in comparison to this one? What do you typically call a candle that closes above the high of the previous daily candle? It's a certain word. It's a price action word. Engulfer. Yep, exactly. What we see right here is a bullish engulfing candle. So then, we see this bullish engulfing candle. Price, could have just corrected, and now we're seeing this push higher, mainly due to this zone of demand right here, this structural zone of demand. So then what we want to do is drop down to a smaller time frame. So if we go down to the 4-hour chart, let's see what we see on a 4-hour chart. Okay. Yeah, and let me remove this line. We don't need this marker. All right. So right now we're on the 4-hour chart of US dollar Japanese yen, and I can tell you this, based off of what I feel is going to happen, we're going to get a bounce higher. Price is going to push higher from here. However, we need to wait for that confirmation to take place. I wouldn't buy until I get confirmation, and usually we find that confirmation on a lower time frame. But there is the possibility that we could see a push higher, but there's also the possibility that we could see a break to the downside. What I want to do is, of course, from these lows right here, we can see that price is testing. Okay. Yeah. I apologize, guys, for this. Yeah, just the technical for some reason, I don't know what happened, but I'm going to set it up right now, and okay, yeah, for the sake of time, I'm just going to do the full screen. Just share the full screen. All right. Okay. So yeah, let me know if you guys see it. Do you guys see it? Okay, good. All right. So, okay, so then we see this US dollar Japanese yen. As we talked about earlier, we saw price key structure zone. It popped up, and now it's correcting, and it's testing this area. It seems like it's finding some support at this trend line that we just drew in on the 4-hour chart. So then what we could be seeing is what you would call a bearish flag pattern. Or we could see a push higher. In either case, what we have to do is just really pick a direction and just go with that. But we could see what you call a bearish flag, where price consolidates within this flag or this channel. We see price bounce up and down, up and down, up and down, and then there's a break to the downside. And typically the break to the downside is similar to the distance of the descent lower that preceded this consolidation. So that's what you call a bearish flag pattern, which means it's possible for us to see a break to the downside. But just like what Wayne said, it's probably going up, and that's really where my bias is. I think it's going to go up.
He said going down.
Probably going up till 17. I'm not sure what you mean, but my bias is that I think it's going to bounce up.
Oh, he said 17 GMT.
Yeah, I think it's this trend line right here on the 4-hour. So then we can look for a buying opportunity, and if you want to play it safe, just test the highs here. Because look for a buy. Let me just draw this in. Look for a buy on bullish confirmation. You don't have to buy yet until it's confirmed, and then just trade it to these highs here. If you want to, you have to shoot for extend targets, or just wait, see what happens with this concession. If you get a break to the downside, the price breaks and closes below this trend line, then then there's that possibility that we could see price slide lower for this pair. But as I mentioned before, we're at this daily zone of structure support. So then even if price does break below this trend line, we could still have bids or buyers positioned right at these lows down here, just in anticipation to put price, push price higher. So then those are things you have to be aware of. So oftentimes you make a decision in the market and you may get wrong. Like even if we enter the buy right around here on bullish confirmation, of course you have to go to a smaller time frame in order to see that. But let's just say that we enter a buy and price decides to fall lower. Well, apparently we're going to get stopped out. But upon that getting stopped out, we get something from that move. Like we do gain something. All is not lost. We do gain something from that loser. We get an idea of what's really taking place in the market. So then sometimes losing isn't as bad as you think. It could be a good thing because it gives you more market data or more information on what's really taking place. But we'll see what happens. Right now I'm not too confident on what's going to happen. But if I was to pick a side, based on the long-term macro view, based on what we see from the daily, I'm expecting this to push higher. But when will it push higher? I don't know. Now, if we do get a break to the downside, let's just say that price, let me just draw this in, breaks through this zone. Let's just say that we get a break of this zone right here. Price breaks, closes below this zone. Then what was once support in this area will now function as resistance. Is wait for price to retrace, to retest the zone, and then
we just had some PPI.
Look for a selling opportunity from there. So yeah, so then right now we're in this valley of indecision, you could say, and we just need to wait and see what happens. But yeah, this is the US dollar Japanese yen.
Yeah, and one thing I was going to point out, of course we just saw some news come out. We saw PPI, US PPI numbers, both the headline figure and the core figure actually underperformed or fell below the expectations. So this is just another sign of just, sluggishness. When we see inflation lowering, then this may give the Fed even more reason to possibly ease, or cut rates, do an additional rate.
One thing that trading would teach you, it would teach you to be humble and not assume anything, but just to wait and see what the market gives you. That's how the best traders trade. They adapt. They're fluid. So, but yeah, I guess that's it. Are there any questions about any? I know he says 5 bear candles in a row going north now. Trust me. Yeah, it's a possibility. I think it's going to go north as well, or go up, but we never know. So, but yeah. All right. Are there any questions about anything else before we move forward? Yeah. Yeah, I think Wayne is saying, yeah, the 1 hour candle. Nope. Yeah, so then I guess we could end today's session. I apologize for the problems that we had with everything shutting down. But the good thing is that we did get back on, and that's good. But hopefully the recording, there isn't a problem with the recording. We'll see what happened with that. And we'll send this recording to you guys if all is good with that. But thanks again for coming, guys. I know we went a bit longer than we usually go, but that's it. Thanks for coming, guys. And if you guys do want to join our private community, you can. We actually go over more pairs. We go over more technical setups. And if you want more trade ideas and trade setups and just how we look at the market, then you could apply for $1 and become a premium member. But, I don't want this to be a sales pitch. The purpose of these meetings is just to help you guys see what's happening on the Euro USD and the US dollar Japanese yen. But that's it, guys. Thank you guys so much. And until we meet again, you guys have a wonderful rest of your trading week, and we'll talk soon. All right. Thank you, guys. Talk to you later. All right. Goodbye.